Hey trader, Steven here with TradeRSplain.com. It is Friday, October the 8th. We're going to look at the overall market, then we're going to look at the top ETFs of the week. So let's start with the Nasdaq right here. You know, we've had almost a 9% from peak to trough. Let's call it a correction. I think we're way past pullback now. And you can kind of see the momentum's trying to slow down to the downside. Then yesterday we got a nice pop, even though it did sell off into the close. Kind of hit that pink line, which is the 20-day exponential moving average, and push back a little bit, but still a good day. So I'm not going to write off. I'm not going to write off the pop. I wouldn't be surprised if we kind of get some, it kind of pulls back and just kind of chops around for a while. I'd probably be more surprised if it just kind of V's, straight out of here, straight down, straight out. So I don't think we're out of the woods at the moment, but the debt ceiling was lifted, the market likes it, and we'll see what happens. But at the end of the day, we are still really in a correction. So let's not just completely write this off because we haven't broke out of any downtrend channel by any means. It's probably likely to do something like this, but we'll just take it day by day. Either way, so I'm still invested. I'm still in. Regardless, just I've been trading a lot less over the last kind of 6 to 8 weeks as this market's just kind of petered out. So if you look at the S&P 500, it looks exactly the same, although it's a little more higher above. The correction is not as deep. It's more above the 50-day moving average. It popped above the 20-day moving average yesterday. So technically speaking, it is in better shape. We'll kind of keep an eye on this too. And the reason why I think that is, it's more diversified, right? It's got banks, it's got energy that's done pretty well, where the Nasdaq really doesn't have those industries. So it's more diversified, value oriented. So when some of those value industries do well, usually the S&P 500 will beat the Nasdaq. But right now it's still living under the 50 days. So that's kind of, my line in the sand. Like how many days is it, above and below? And that doesn't mean the 50-day moving average is the end-all be-all, because it's not. It's just it is clearly, the market clearly respects it based on all the support, now all the resistance. So again, we'll just kind of keep an eye on it. So let's move to the top 10 of the week. We definitely have some new names for the last 3, maybe even 4 weeks. It's just been banks and energy, which is 100% fine. Right, and sometimes it's nice to see some fresh names. Let's look at this Bitcoin trust right here, the GBTC. You can see, there was some accumulation right at the bottom here. And let me kind of draw this. So it really broke out above this kind of level yesterday. And honestly, there's a lot, in my opinion. I mean, this is a bullish looking chart. It went from very bearish, where it broke this trend line. You can see kind of going down. I could call a lot of bullish ways. You could say a cup with handle pattern, or the handle could be up here, wherever you want to draw it. Either way, it's back above the 50. It's back above the 200 day. It has cleared this level. Will that hold? I don't know at this point. This is so steep that if you want to play this, I think it could chop around. If it falls below this, I think we're in trouble. But you really have to use very wide stops. So that means you have to take probably below average size positions to accommodate that. So just, I was talking about this last week when it almost completed a weekly reversal pattern. The only problem is it was below average volume. But, if you look at the weekly chart, to me, that looks like a cup with handle breakout right there. So it looks pretty good. We'll just kind of keep an eye on it. Right now, I'm really not swing trading this, but I do have some long-term crypto positions. Now, so we have this Chinese Internet ETF, the KWEB, KWEB. And I'm going to be totally honest with you. I used to love Chinese stocks back in the day. This was like 5 years ago. I played them all the time. I made money on them. And just over time, just the pure volatility of them, it just made it not worth it, right? I started not making as much money in them, and the volatility was stopping me out all the time. So I kind of wrote Chinese stocks off. for the last couple of years, just due to their pure volatility. Well, this is kind of interesting because you can see that this peaked in February at 104. I mean, they got all the way down to 45, and you really have a kind of a triple support right here. 1, 2, 3 times, and then yesterday it had a huge pop, and it broke above the 50-day moving average and above average volume. Yesterday was its first close above the 50-day moving average since February. I always talk about personality changes. That's a pretty significant personality change right there. Okay, so to me, if there were ever a place to swing the bat, I would do it right here, because you can get in with just a stop loss right under fresh lows. Maybe risk 8-9%. I don't know where the stock's gonna, or the ETF is gonna open at, but to me, this could easily rally. I'd probably play the ETF, because clearly the ETF can move like a stock, and you don't have that individual stock risk. But, there's so much out of China, they just, snap their fingers and, a company gets slaughtered 50%. So you always got to be careful with this industry. It has a lot of upside. It probably has more downside. But right now on the chart, I see kind of a triple bottom support and a breakout above the 50-day moving average. You might want a couple more days above the 50-day moving average, because when you only have one day, right, that's prone to failure. But if you have 2 or 3 days, then, the trend has probably changed. But this was looking really good, really, really early in the trend for a nice swing trade. And if I turn it right here, as long as volume is normal today, on Friday, this is going to be a weekly reversal pattern, right? It just needs 20% more volume on the week, which just means it just needs to match its average daily volume. And that'll look pretty good right there. So I'm kind of bullish on that chart right there. I think it's going to make a move. So you got a lot of these in Indonesia. A lot of these charts moving a little bit. I could say it broke out down here and then came back and tested the trend line, as now it's moving. Look at that. So you have a lot of emerging markets that are starting to creep in. Now remember, if we learned anything from the last 3-4 weeks, strength follows strength, weakness follows weakness. And what that means is, last 4 weeks you had energy and banks, week after week after week. And they're still up this week. They're just not in the leaderboard. So now we have, broad participation in emerging markets that are starting to creep in the top 10. And a lot of these charts are starting to look good. They're starting to break out. So in my opinion, I'd probably let this Indonesia pull back a little bit, maybe to the 200-day moving average, and then you could enter with a stop under this $20.89 swing low. Okay, so that chart looks good. Peru, that's a pretty ugly chart, but it did make a pretty big pop yesterday. I wonder if there was really any news on this. Probably not. No, there wasn't any news. So, that's a pretty bullish right here. The chart is still pretty ugly, so I'd probably say I definitely like the KWEB more, right? But this, this popped above the 50-day moving average. It did right here and failed. So let's see how it acts in the ensuing days today. But if it holds this level for several days, then you could always enter with a stop under Thursday's low. Let's look at Russia. Now this, honestly, Russia, you might as well buy oil, because you can stack, look, US, look at this chart right here. A lot of times they are very, very similar looking charts. So if you buy Russia, you're really buying oil. So this is extended along with oil. So I like this one and this one better. Let's go down to gold. Still in a downtrend. RING, GDX, they're still in a downtrend. They haven't proven anything to me. They're not even above the 50-day moving average. I'm just going to wait. Blockchain. This is really in a sideways pattern right here. I see a really good neckline right there. Maybe kind of wait. Now, IEO, which I've said I own, this is extended, right? I bought on this day, right as it broke above here, and it's gone straight up. So that's pretty nice. What else we got right here? So a lot of more Asian countries, right? This chart doesn't look as good as Indonesia and the Chinese ETF, so I'm going to stick with these two. Now, one more thing I do want to show you from last week, or even earlier in the week, I think on Monday, I talked about the Uranium ETF, and I said, hey, you know, it has really pulled back to a nice little support zone after a 50% move. And you have a lot of stocks like Chemico and some of the other uranium miners in this, but I said if it pops, right, that's probably a good entry, and it popped Monday morning, and then it just sold off by the end. So I've talked a lot about in corrections, you probably want to wait to the end of the day to make trading decisions, even if things are moving fast in the morning, because you have this kind of sell-off. And it barely undercut this low by like 6 cents. But I'm looking at the pre-market, and this is up almost 2%. So that could have been just a really, really nice shakeout. If you did play it, you might not have been stopped out unless you just literally had your stop loss, 1 penny under this low, because I think it undercut it by 6 pennies. So, a lot of times I usually do 5 to 10 cents at least, for a stop loss under that level. So you might still be in it. This could be a night here. If I clear this up, this could be a nice little double bottom, right? Kind of like that. That's kind of an ugly drawing, but you see what I'm saying? So don't completely write this off just because that pop didn't work. If it's popping this morning, I'm considering taking a stab at it and just putting a stop loss under these lows. Now, if it pops this morning, that doesn't mean it's going straight out of here. To me, it seems more likely that it'll do some sideways action because this was a big move. That was a big move. Sometimes those big moves, they take time to consolidate, okay? So we'll just keep an eye on it. But I still like this chart. I still like this setup. It might just go sideways for a little bit longer, but I absolutely take it day by day. I like the fact that this was kind of created a pivot, and if you want to be conservative, you can just buy as it crosses above Monday's high and put a stop loss below here. That might be a little wide. Let me look at that. So that means entry of 83.60, stop loss of 74. Yeah, that's a little wide. So if it does cross above that and you want to go the conservative route, maybe just use an 8% stop loss, which is probably right here. Or if you want to go ahead and enter right here, you're getting in early, but you might have to wait a little bit. You can have your stop loss under this right here. So I hope that was helpful. Everybody have a great weekend.